Let's move on to the latest business news. And the markets have been reacting to that announcement by Donald Trump of banning visitors from continental Europe. A little bit unusually at this hour. Our business editor, Stephen Carroll, joining us on set a little bit earlier on with all the details. Stephen.
If ever there was a sign that things are bad, it's that I'm here.
You're here early.
Usual, talking to you.
That is so true.
We are looking at another very rough day on stock markets today. Remember, on Monday we were talking about the worst day since 2008 for global shares, and in many cases we are seeing markets sliding to levels lower than we had seen on Monday. Now, markets are reacting in two stages. First, we had that declaration from the World Health Organization that COVID-19 is now a pandemic. That happened while Wall Street was still trading and investors selling off on that escalation by the WHO. The S&P 500 on Wall Street finishing the day down 4.9%. That's wiping out any recovery that we'd seen since Monday of this week. The Dow Jones officially entering a bear market. That's as we've seen it fall by 20% since its recent peak in trading. This, as you can see there, the pictures there on Wall Street at the close, the Dow Jones down by almost 6%, the S&P 500 down 4.9% at the close. So that was what was happening on Wall Street. Now, after the American markets had closed and just as Asian trading was getting underway, we had that announcement from Donald Trump about travel restrictions for those coming from Europe. That is hitting shares hard in trading today. I'm going to start actually with what's happening in Australia, because the Sydney markets, the ASX 200, slumping by over 7%. That's its worst day since 2008. It had escaped some of the worst sell-off on Monday. That's coinciding with the Australian government announcing its stimulus program to combat the virus-related slump. Investors really not impressed by what's happening there, and also selling off on the wider market panic as well. Falls too across the rest of the Asian markets. The Nikkei in Tokyo down 4.4%, finishing down under 19,000 points at the end of the day. And just to give you an indication as how we haven't recovered from Monday's sell-off. We'd had some gains partly during the week, but nothing really that dramatic. But this is what's happened on Japan's Nikkei since the start of the year. So hovering mainly around 24,000 points, and that really steep sell-off that we've seen in the past couple of days. No recovery. That is still downward trajectory for the Nikkei when we compare it to just a couple of days ago. So we're not seeing any recovery. This market down by around 20% in just under a month. So really huge sell-off there for the Japanese markets. Traders saying investors were disappointed that the White House announcement didn't see more action from the United States as well. Now, if you take a look at some of the individual companies being hard hit, travel companies, of course, given that latest announcement from the US, going to be very difficult for them. Qantas, the Australian airline, down by 10%. Flight Centre, the travel agency, their shares having their worst day since they were listed, down 18%. India's SpiceJet being hit as well, down by 20% too. So a huge hit for the travel sector in this latest announcement from the White House. The other aspect of what's happening here is what's happening on the oil markets. Of course, less travel is going to hit demand at a time when already there's a price war underway by major oil producers as well. We had talked about oil tumbling on Monday. It had recovered a little bit since then, but today back firmly into the red. Brent crude trading around $34 a barrel. That's not quite as low as it had hit on Monday, but really wiping out most of the recovery that we've seen on prices. And certainly that is bad news for oil companies and for those companies that are invested in oil companies as well. Of course, a lot of banks have money invested in oil firms. That'll be bad news for them. Stock market volatility set to continue. A trader I was speaking to earlier on saying that, look, it looks like every day now is one of those days when on the markets we're expecting European shares to open sharply lower in a couple of hours' time as well. At the moment, London's FTSE 100 expected to open down around 5%. This isn't over yet, Stuart.
And I suspect you may be here at this time of day a lot over the next few weeks. Stephen Carroll, thank you very much coming in, especially early to talk to us earlier. Thank you very much. Let's move on and talk about